Good morning, it's Jeffrey Cohen. It is August 31st, last day in August. Markets are open in terms of pre market trading, and we're going to talk about things. So, up until today, we've had really bad 3 days. I think the S&P 500 fell 5%. NASDAQ and the Russell also fell. This was a tough, tricky market because the chairman of the Federal Reserve Bank went to Jackson Hole, Wyoming, at an economic summit for unbelievably wealthy and powerful people. And he did a videotaped discussion about how fire and brimstone was going to rain down from the heavens, and the Federal Reserve Bank was going to do everything it had to do to fight and beat inflation. So I was convinced that he was serious. I guess everyone was convinced. And therefore, instead of being confident and positive about the market, they sold off the market. I guess they didn't like it. And so it's important that you understand what that did. Instead of reassuring people, instead of kind of like what Donald Trump would do, which is talk up the market, Greenspan scared the market, put a lot of fear into the market, caused a lot of people to lose money. In fact, I've seen tweets of investment management people who are quitting their jobs and, I don't know, going to go work at Walmart or something because they lost it all. And it's fine. President, of course, vice president, nowhere to be seen when it comes to the markets. That's kind of not their bag. And interest rates rose, but only for a day or two, and then they start coming back down. So we're going to talk through things. This set it up for me to be super scared. I went for a long bike ride yesterday, and then I came home, and then I worked on my bike, and then I went out again for a second bike ride. That's how scared I am, and frustrated, and not understanding what's happening. And I got on Twitter last night. There's a group of people that follow what the Fed does. It's the funniest thing ever. And I'm no expert at the Fed, right? But I noticed that the assets on the Fed's balance sheet, the assets. So you type Fred, and it's WALCL. Total assets less eliminations from consolidations for the Federal Reserve Bank. These are like the bonds that they hold. If they were to hold stocks, here's the stocks, here's the mortgage-backed securities. I think this even has foreign things. If they hold foreign bonds. And so from the peak, it was 89.65, and now it's 88.51. So the whole tightening cycle since April has been $114 billion. Now that's probably what the Fed takes in a week or two, the U.S. Treasury, in tax revenue. $112 billion. It's good money, but it's not much. Not when there's like 30 trillion in circulation. So, and it actually went up this week. So they bought some assets. So the other thing that these guys talked about, they have a funny name, so please don't be offended. They're the Occupy the Fed movement. But it's important because they're not all political. One of the guys is Alf. I like Alf. Alf is a paid maven. He's a maven. He's truly a maven. I can't find any of his stuff, so that's okay. So, point is, the market is changing, right? And there's politics involved. So, let's talk a little bit about where we're at. The yield curve hasn't really changed since we spoke last, except right in the middle there, the 6-month to the 2-year to the 5-year is up. The 2-year treasuries are yielding about 3.5%. That's a lot. versus 30-year, which is 3.25, which is 10-year, which is like 3 1/8. Okay, Jeff, what does that mean to me? Not much. It means rates are up. Interest rates are up. Interest rates cost more to borrow. Cost more for corporations to borrow. Cost more for the government to borrow. Probably going to cost more for you and me to borrow when we get our next credit card or we go to the bank to get a mortgage. In fact, it will cost more. I can show you that mortgages will cost more, but that's fine. And that's going to slow things down. That's going to make houses sell less quickly and the price of houses to go up less. It's going to make car loans more expensive, making the cost of cars, especially used cars, because you have to finance used cars with a less high quality security or collateral. And so my guess is that the cost of cars is going to go down, the cost of houses, not rent. Unfortunately, I think rent's still going up. But that's because of big money going into the cheap house market. And, of course, apartment buildings, buying them up when the market was down. And so, all right, so where are we at? Oh, and by the way, keep watching the video. I'm actually going to walk through the Chicago Quantum Net Score uprun, and we're going to build a model portfolio, and I think we're going to get to it in this video. If not, I mean, remind me, right? I've got the chat open. Ask me anything, and we'll try. But I also want to show, I'm leaving the tickers open, the S&P 500, the SPDR is the ETF, the QQQ is the ETF for the NASDAQ Composite 100, and the IWM is the ETF for the Russell 2000. They were more active before. They're up. The S&P 500 is up. It's slowed down the trading, though. But that hits 400, and you know today's going to be a beautiful day, right? It's going to be a bullish day. We don't know, so we're leaving it up. We're going to check it out. It's as close as we get to a ticker. We also want to share how fixed income did. So fixed income, wow, lots of new lows to new highs. 538 new lows to 40 new highs. That's high. That's a lot. And investment grade had the most, 52-week lows. And it looks like it's about 19 to 1. And advances versus declines. So fixed income, especially corporate investment grade fixed income, did not have a good day yesterday. So it's interesting, right? The Fed yells at people and the market reacts. God, I wish I could post a tweet and talk about my, or a video, talk about my own investments, and then the market would just go up or down or whatever it was supposed to do. It doesn't really work that way. What's interesting is the futures haven't moved that much. They're only up 1/4 point. And the VIX at 26.14. I think that's what it closed at last night. You've got Europe is down. Asia's down. The Sensex is up a lot, which is interesting. That's India. Malaysia, Jakarta are up. You know, we love those markets. We love those people. We love those people. We love Jakarta. We love Indonesia. We love Malaysia. And we love Indians. And we hope that your stock market goes through the roof. And India, we hope that your currency recovers and you get some strength in the currency there. If we look at the bonds, this is interesting. So U.S. Treasury bond futures fell by 0.5 point. And that's a lot. 10-year treasuries are down. 5-year treasuries are down. 2-year futures treasuries are down. But to different amounts. And that's going to make it tougher, right? Because that's like a security that you use to borrow money. That's it's a trusted security. And so U.S. Treasury bond futures down means the yields are going up. The yield at which you have to be paid if you're going to buy a fresh new treasury, right, goes up. Price goes down. Now look at this. Gasoline at $2.59 a gallon. So there is some good news here. Crude at 89. Now if you're a consumer. Copper under $3.50. Silver under 18. Micro gold futures under 1750. So you pretty much took a flamethrower to commodities. I don't follow food, so I'm not really good to talk about that. But energy's down. Energy's down bigly. Copper is down. Silver's down. Gold is down. Interest rates are up. Okay. I got one eye on the S&P 500 ETF there. That thing's going to pop 400. You know it is. It's going to be a nice positive day, but who knows? It may not. Honestly, it really may not. This is early in the morning. It's only 6:20 in the morning. So what else do we have, Jeff? Talk to me, right? So we can look at the sectors that did okay yesterday. They all fell. What's interesting is energy fell the most. Energy fell 3.4%. Financials fell 0.5%. Okay. We can look large cap stocks down a point, small caps down 1.5, mid cap 1.5. So the large cap stocks did okay relative to everything else. And the VIX, if we just look at the VIX versus the S&P 500, you see the VIX is up. Now, there's something interesting to point out, which is the variance of the S&P 500 crossed a threshold that's at 1.8 times 10 to the negative 4. It's high. The variance of the S&P 500 is high. What's also interesting is that the variance of all of the the stocks of all the money-losing companies out there listed in the U.S., including foreign domiciled companies, is flat. In fact, it's slightly down. So that's odd to me, right? You would think if the S&P 500 variance is up, that money-losing stocks, which normally have 2.5 to 3 times the variance of money-making stocks, are just going to be terrible. And look at that. The all-stock variance of money-making stocks, 2,144 U.S. located profitable company stocks. Booyah. 1.9 times 10 to the negative 4 versus 1.8 times 10 to the negative 4. So, yeah, the risk of the S&P 500 goes up because the price variance goes up. So we look at how the market's going to open, and it's not a broad large rally, but the S&P 500 futures are up about 1/4%. NASDAQ looks like it's going to be up 2/3%, and that's pretty exciting if you're long. If you're short, maybe you're a little nervous. Maybe you ought to clip back some of those short holdings, right? Maybe it was not we massively increased our portfolio size. We went crazy yesterday. Oh my God. We're losing so much money that, like I said, I had to go on 2 bicycle rides. So we take a look at the market. This is over the day, 1 day performance, and you can see energy's blood red. So who knows? Maybe it's time to get back into some of those beaten down energy names, but there's more pain to go. Energy is just really, really down. Wow, look at that. This is all stocks. This is not just the S&P 500 stocks. You can see financials are mixed. That's okay. You know, it's a mixed bag on financials, right? So some are positioned better than others. Tech, largely lower. Healthcare, largely lower. Communication services, mixed. Interesting is AT&T is up. T-Mobile's up. Zoom Video is up. A lot of communication names are up. But Google's down, Meta's down, Microsoft's down, Apple's down, Nvidia. The big names are down. Visa, MasterCard, Berkshire Hathaway's down. Interesting. Alibaba's down, Amazon's down, Tesla's down. So a lot of the kind of the risky names, railroads, farming equipment, staffing, basic materials, utilities. So lots are down. yesterday. If we go back a week, then you see actually like names like Apple, Microsoft, Google, Tesla, Microsoft very much down. But the Chinese names are up because I guess China made a deal with the U.S. to allow for some more auditing of their firms. That's interesting. That'll allow them to stay listed in the U.S. And if we go back a month, you can see there's still signs of that recovery, that bounce, the bear market bounce, and energy bounced. So that's interesting. Let's take a look at the futures again. Different way to look at it. And here you see S&P 500 up 0.2%. Nasdaq up 0.6%. Russell down 0.1%. The VIX is down, so risk a little less in demand right now. But I'm still shocked at copper down. I love the fact that gasoline's down. Look, the other page that we looked at said it was at 250. Now this one says 245. That's if you buy 42,000 gallons wholesale from like a distribution point. And then you have to add transportation, additives, taxes, markup. And then that's the price you pay. That's nice. That's down like 50, 60 cents in a couple of days. That was $3 not long ago. So good for you. Everyone's going to pay less in gas. That's good news for inflation. By the way, interest rates going up. So Jeffrey, how do you know interest rates are going up? Show me. All right, fine. I'll get to it. One of the things you can look at is just a 30-year bond yield. This is an inverted or an inverse number. A 135.66 bond price equates to a bond yield of probably close to 3.25% to 3.3%. You got to do that math in your head. It's kind of complicated. This is the 30-year Treasury bond. It's at 3.253. So 3.25 is the same thing as 135.66. Okay. It could be much higher. It's not. It's okay. It's okay. We're doing all right. Let's take a look again. How we doing? Still haven't broken 400. Let's break 400, guys. Let's do it. All right, foreign exchange. U.S. dollar again. The euro is down below $1, but it's just dancing around that point. Great British pound at 116 and a third. This is the big number here. The Japanese yen, and I want to point this out to you because Japan, obviously an export-oriented country. Not a lot of resources, so they have to buy things, often denominated in dollars. They pay in a deflated yen. Actually, in this case, a depressed yen. Then they make it, then they consume, and then they export. And so the challenge you have is that when the yen, so I'm used to these numbers. I'm used to 115 yen per dollar. I went to Japan, did a lot of business in Japan, and at 115 per dollar, prices seem fine. They seem kind of like Chicago prices when I was in Japan. There wasn't like $300 steaks. I mean, for normal people, I'd go for lunch, it'd be like $6. It was normal in Japan. The prices were like Chicago at 115. I can't even imagine now going to Japan and it's 139 yen per dollar. So lunch is now going to be $5, maybe $4.50, right? But things are going to be more expensive for people in Japan that earn yen, save in yen, live in yen. So for them, gas just went up. Gas just went up 25%. Gasoline. Gold went up 25%. Everything went up by 25% that they have to import to consume. But the things that they make, same price. So their quality of life, their standard of living drops on imported goods. Their exports, they're going to have to offer like free shipping or something because this is tricky. At 139, you don't make money as an exporter. Their margins, they're giving up their margins in order to protect their inflation. They're They're dropping the currency and they're sucking the inflation out of their economy. I think it's great. I think the fact that Japan can do this, is brave enough to do this, is tough enough to do this. Hell yeah. Hats off to you guys. You're doing good there. You're really fighting inflation. You're fighting the Fed. You're fighting it all. I love it, right? But that means I'm probably not going to buy a lot of export-oriented companies in Japan, or if I do, it's a contrarian bet, and I'm buying them for the long haul. That shows a lot of toughness there. They've really just destroyed the currency. And so it just is what it is. So we look at Bitcoin at 20,300. Bitcoin is in the same kind of range that it was. So I'm looking, the spider's at 399.35. It's up just a tiny bit, but looks like markets are still hanging on to a green start. And we are still going to walk through our up and down run, or at least our up run, and map out that portfolio. You know, I woke up this morning thinking we're going to track a model portfolio in a day like today when the market is so crazed. So, yep. So the news today is all political. That's so interesting. It's largely political and it's largely newsy. It's not economic. So zero hedge is normally very news, like market oriented. So let's look at CNN.com. Main page. Okay. Yeah, it's newsy. How to stop the itch of mosquito bites. Steroids. Driving across country. Taylor Swift. Still looking good at 50 years old there. Or she's 60 now. I think she's like 50. She's wearing a flapper outfit at the Video Music Awards. 50? Yeah, I think she's like 50 now. Yeah, like Lady Gaga's like really old too. I think she's in my mom's nursing home, Lady Gaga. So yeah, where's the money news? There's no money news. So you know what that tells me, guys? That tells me that the fix is in. The fix is in. The media is being managed today. All right, so money markets. How are we doing with money right now? Deposit amount $100, baby. Let's go. Can I make any money in the market? Yeah, 2.2%, right? Risk free. That's not bad. 2.15, 2.2. Yeah, there's places to store your money. I promised you I would look at mortgage rates. Mortgage rates are back up to 6%. The mortgage-backed security market is now lower. So I had a conversation yesterday. The Fed is refusing to sell off their mortgage-backed securities. The runoff isn't happening because why would anyone pay off a 4.5% mortgage to refinance at 6%? So if there's no refinancings, no one's paying off the mortgages, prepaying them, mortgage-backed securities are not paying. So they're not maturing. They're not being redeemed. Oy, Gavalt. So the Federal Treasury is holding mortgage-backed securities that they bought. They locked up the market. And now mortgage-backed securities are falling. And so the Fed, the assets on the Fed's balance sheet are just worth less. That's great, America. If you're a taxpayer, you're paying for this. Oh, let's go out and buy like $1 trillion worth of mortgages. And then let's raise interest rates so the price of those mortgages goes down so that the Treasury could lose a ton of money. It hurts my feelings. As a taxpayer, it hurts my feelings because I'm going to have to pay for that. You're going to have to pay for that. Bunch of douchebags. Yeah, how about this? How about you just roll them off in a measured pace and try not to make the prices fall before you sell them? Because guess what? The prices are going to go back up when you're done selling them. And so all you're really doing is giving a subsidy to the investment banks that are going to buy these. So stop it. Someone's got to watch the Fed. I feel like Ron Paul needs to come back. We're going to audit the Fed. God, I love that guy. What is he? He's like 100, right? But he had a point. He did have a point. So 1 month Treasury bills at 2.2% it's like your savings account. That's fine. 1 year Treasury at 3.5 seems high though. 1 year Treasury at 3.5 seems high. Now, of course, it dropped in the last 3 minutes since we've been looking to 3.35, but it's high. That's high. And the 10-year Treasury looks like it's trying to creep up there this morning, but it's at 3.15, which is elevated. The 30-year at 3.25. It's actually not bad. So what else to look at? Remember inflation? Remember how it was unchanged last month, but it's up 8.5%? When does that new number come out? When's the new number come out? When does CPI come out? Because my guess is, see this energy number? See how all items is up 8.5%, but energy was up 33%? Let's take a look at energy for a minute. I don't think energy is going to be up 33% this month. I think you look at gasoline. Let's look for 6 months. We go back to June 1st, it hit a peak of 4.25. Do you remember? Gasoline was $4.25 wholesale, which means it was like $6 in your local store. Now it's $2.60. Yeah, that inflation's gonna read really nicely. It is. It is. Housing prices. Is there a thing called like a Schiller? Of course I spelled it wrong. Schiller Housing Price Index. Isn't there a thing? There's a thing. A Schiller Housing Price Index. Housing prices are through the roof. Have they moderated? They have. So from May to June, basically flat, 305 and change to 306 and change. So they're up 1/3 of 1% in a month. So housing prices have moderated. And we looked at it. Your mortgage is up to 6% again. I think the Fed is going to show that inflation's been licked. And I think that's going to change the whole dynamic of the market. And there's your next climb higher. I don't want to be the guy that always sounds so optimistic, but we'll just look at S&P 500 futures. So we're going to have to make another video this morning after we get the kids off to school, and I'll walk through the model portfolio. I'll still do it pre-market, but it's going to be a little bit later. But just one last thought for you. If inflation comes in with a very, very low, safe reading, all bets are off. So when I look at the NASDAQ, what I see is that yesterday, that's not yesterday, this is the 1 day. I want to look at the 1 hour chart. And you see that yesterday, towards this is actually pre-market. Oh, that's interesting. I want to see pre-market. Get back here. Pre-market, you had some accumulation. You had some good stochastic momentum at about midnight to 3 a.m. for the NASDAQ. And then you've got some positive money flow in at about 4 in the morning. So some people made some bets at 4 in the morning. You know, those global desks. And That's not bad. There's a chance here. Look at that. The RSI is at 41. The MACD is still negative. We're still negative. We're still negative. That's okay. And we're going to take a look at the two stocks that we own right now. Verizon. God, how terrible Verizon performed. Look at that. Negative Nelly, right? Like it's a distribution day. We're just going to look at it for the day. We're going to look at 1 month, just to make it simple. 1 month Verizon. And you can see it distributed. The money flow went up, but the stochastics were negative. Stochastics moved positive. Stochastics extremely negative. Money flow turned negative yesterday. Momentum turned negative, very negative over the past 2 weeks. RSI is at 28. Verizon is one of the worst performing stocks right now, I think, in the Dow, and one of the worst performing stocks in our portfolio, and is just a terrible place right now if you're fast money. If you're slow money, Verizon has a 6% dividend. And it's not going anywhere. We've been going into Verizon stores. We've been on the website. We've been looking at 5G. We've been reading reviews. It's not bad. And Verizon has a chance to pick up some market from its competitors. We look at Corbis, and Corbis is a totally different story. So Corbis had a huge sale. ETF managers liquidated about 5% of the stock. No news, no nothing, just did. And so that stochastics took it very negative. Momentum, extremely negative. But it's because a money manager sold stock. It's not because of anything intrinsic. And so if that thing could turn around, RSI at 30, you're picking up Corbis at a steal right now. Now, this could be a dog company. It could go to zero, but I don't think so. They've got way more cash than market cap. And there's talk, there's rumors based on an anonymous post on Yahoo Finance that there could be a non-dilutive partnership to develop one of their potential drugs or preclinical drugs or one of the clinical drugs, non-dilutive funding. It's very exciting. I love it. So, all right. Have a good day today. Check back in later. I'm gonna work on the stock picks, and we're gonna build that portfolio for you. Oh, S&P is turning a little bit negative. It dropped below 399. So, who knows? Could be going the other way now. It's the problem with talking so early. That's not bad though. The 30-year bond is below 3.25. 10-year note is below 3.15. So interest rates dropping. Maybe stocks coming down a little bit. All right. Again, remember, fixed income very weak right now. Very weak. Stock and the breadth was very weak. Stock breadth was extraordinarily weak. It was like 19-1. New lows to new highs. Advancers to decliners. Decliners outpace advancers 3-1. Very negative. And what's interesting, I just want to point this out. For those who like simple charts, sometimes I like it simple. Keep it simple, Jeffrey. Help me. Keep it simple. The NASDAQ tried to rally in the morning. This is yesterday. And then within an hour, it fell to the point of where it closed for the day. So there was no recovery. It was just a little bit of bouncing. Same with the S&P. It opened a little bit higher. Thought it was going to be great. Dropped in an hour and then stayed flat. Why would it do that? In the morning, we thought that there were going to be all kinds of good news. We have indices we look at, right? So the regional banking index is a mix of red and green this morning. It's mixed. If we look at money managers, which is a derivative of stock market prices, it's mixed. about 60-40 red to green. If we look at retail, very economically sensitive sector. Looks like it's about 70-30 red to green. We look at chips and semiconductors. It's pretty much all red this morning. So maybe the fast money, the smart money is betting against the market. But those are like your tried and true bets, right? Crypto and miners. What's interesting, I'm going to move this. Dogecoin, we've been starting to track it. It's down to 6.3 cents. Bitcoin at 2,300. It's interesting. You get a little bit of mix there, but in general, internet's down. SLNH is like a real estate investment trust for data centers used for Bitcoin mining. But take a look at your physical miners. We're down dramatically. Oh, I'm not looking at the right look. New view. I'm sorry. Pre-market. Yeah, so pre-market, they're down. That's what I wanted to look at. Pre-market, crypto and miners are down. Pre-market, more banks are up than down. That's interesting. And the large banks are up. That was funny. Pre-market, investment houses are up. Money managers. Pre-market, retail's up. All right. So they're trying here. Chips and dips. Semiconductors. You got 2 down. You got about a dozen up. So market is looking to trade higher. But again, this totally could be a head fake. So we're going to take a look at our portfolio. And I'm sorry, Pumpkin. And we're going to go. So thank you very much for watching. If you like the video, if it's helpful, right, to get you going for the day, get you started, where are we at, right? Spiders below, $3.99. So it's good, but not great. Drop a comment. I like that. Drop a comment. I'll respond. Hit the subscribe button in YouTube. That helps. In fact, you can go to our website. We actually post these things that we type up. We post a lot of data as well on the markets. You can go to our website. You can actually sign up to receive our newsletter. Oh, hey, Jeff, I'll sign up. Cohen.sourcing@gmail.com. I agree to receive marketing and promotional materials. Subscribe to the newsletter. There it is. It's free. Doesn't cost you anything. And if we send out a mailing or something, you'll get it. And if you subscribe to our channel, it's great for us because it tells we don't make any money from making the videos. So it tells YouTube it's a trusted source. They're not a scam. You can promote the video. You can at least tell people to watch it if they like stock market stuff and help spread the word for us. So thanks again. Good luck in the markets today. Don't invest more than you can afford to lose. Right now the market is so bouncy that you might lose. So just be careful out there. Thanks so much for watching. Bye-bye now.